Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day, end of week. What else? End of quarter, end of first half of the year, market recap. So let's kind of just give a quick review. And, I like doing these videos as we progress through this year and kind of just give a recap. So I'm going to talk about, a little bit of today's price action, a little bit about the week, where we are a little bit in terms of technicals, and then I'll recap this month's performance. We'll also look a little bit at this year's performance in terms of like what's been leading and where the performance has come from this market. So a couple just quick kind of observations from today. These end of month days, they're really difficult to trade. Eventually I will do what I say that I should be doing and just take off the last trading day of the month. It's just too difficult. There's too many moving parts, especially when you had today where you had rebalancing, both like the normal like portfolio rebalancing that you see, where funds just are, getting out of some things, getting into some other things, and they're doing that just in one day. Like there's no follow through from that, and if you look at what was the name that I was watching at the end of the day today? I think it was Apple. I had an alert on Apple, just like a downside alert on it. I don't have a position in it or anything, but this is what happened after after the quadruple witching day two, like just nasty sell-off. So if you like Apple, there's not going to be this volume on Monday. This is just straight up portfolio rebalancing, and also the Russell rebalanced. I'm just trying to show you what happened last week too. It's being reweighted down in a couple indices is probably most likely the culprit, but one, two, three, I think this is all the way back in here. Right. Yeah, here it is. So, this big sell-off that happened last week too, and then it recovered, so I went over this in yesterday's video too, but it's really dumb that they decide to trade all these shares on the close, and they impact the stock. So it's completely like probably artificial is not the right term, but it's very mechanic, I would say, but it has nothing really to do with market demand or supply in terms of it's just index rebalancing or portfolio rebalancing. So this was what I was explaining in yesterday's video, that it's too difficult to try to trade, to try to do a lot on these days, but you can scoop something up that is being pushed down because of a one-time event, right? So I think that's probably the best way to describe it, is a one-time event. So Apple, I'm sure there's other victims or names that actually benefited from this too, and at the same time, like if those names will go up artificially or one-time event because of index rebalancing, you could ring the register on those names and put some of that in your pocket and wait for it to revert back a little bit and go from there. We talked about Amazon earlier in the week too. Amazon was another day where it completely sold off, right? So you just have a lot of head scratching moves like this, and look at the volume on the close too, and Amazon. So that's kind of the summary of today, is just that, if you try to do too much on these days, usually you get it usually does not work in your favor, because the market just seems to kind of get pushed around, based on these one-off type moves, right? All right. What was interesting today is bonds did sell off today. They were looking for reasons for that. I don't know, but that could also be some portfolio rebalancing that happened today. But what I could tell you is, take a look at this and just note that we're back outside the value area for the year, right? So go back, rewind a couple weeks ago, and we were inside the value area for the year. Now this kind of looks like a rejection back here. So no major gain, no major change in trend, and bonds are lower again, once again, and that's a pretty ugly week for bonds. By the way, risk disclaimer in front of you: everything that we're going through in this video is for information purposes only, not giving out any advice or recommendations. What did do well today? Banks, and there's some announcements with banks and what they're doing in terms of like their capital structure. I think JP Morgan just announced like a $30 billion or up to a $30 billion stock buyback plan for last year, and they increased their dividends slightly. So you've got a couple announcements like that. So I wanted to get to the performance, just looking at just get the right spreadsheet. Now that we're done through the month, right? Just wanted to kind of recap. So first of all, and we could do this with this, if you take a look at this, what I've got highlighted in Excel here, but for the month, and for the last 5 days, SPY, Qs, they were all a little bit negative. But for the month, still turned out a pretty darn good month. SPY up 3.2%. The Qs finished up 6% for the month. That's a huge month. That brings the Qs up to 17% year to date. That is leading, and that's the SPY's up almost about 14.5% year to date. So that's no slouch either. And my performance, I always tweet out my performance at the end of the month. Trading account, I'm up right around 21% year to date. So I'm outpacing those a little bit. And that's my trading account, and the TTG trend portfolio is up 15% year to date. And that's more geared towards a little bit of a, I don't want to say long-term holding, but we're following trend. And I don't let any one name dominate the portfolio. In fact, I think the biggest weight in that portfolio is 5%, and that's an ETF. That's the Qs right now. So I'm satisfied with those results. It's kind of been, I think, what made this month difficult too was that the breadth was not very good overall. The returns were concentrated, and that's obviously your goal is to find the winners and to be in the names that are outperforming, but it was slim and it was growth. And I think what's kind of revealing here is when you look at the growth ETF, month to date was up 6.6%, and look at value is actually finished red, right? So growth stocks did very well. Probably, for a lot of traders who really spend a lot of time focused on growth, they probably did not complain at all about that breadth, that it was not particularly strong, because it was the growth names that really excelled. A few other observations: IWM, and both IWM and actually mid caps trailed this month. They usually are like somewhat in the middle, or sometimes they actually outperform, but the mid caps were down 2% month to date. We for this month, we don't really see that too often, right? And that's in even for looking at the small cap, and again, it just kind of tells you here the difference between large cap growth, which really excelled, and small cap growth, which was red for the month. So not very good there. Again, so not only was the performance concentrated in growth stocks, but very large cap growth stocks, right? TLT looks like it did finish up for the month, and the dollar also showed some strength. All right, now when we look at sectors, right? And let's see if there's anything else I wanted to highlight here, but gold's up 12.5%. Bitcoin, which I don't have the value, this is the Bitcoin ETF, but month to date, Bitcoin did not have a good month, down 11% this month, and was weak again today. Qs month to date, or Qs the equally weighted, look at the difference between what the Qs did, 6.5%. And again, just kind of goes to what I already explained, is that the growth was concentrated, was very narrow. The performance, I should say, was very narrow, because if you look at the same index, right, the QQEW versus the Qs, right? So equally weighted Qs, where every name gets the same weight, versus market cap weighted, right, where the larger names get the bigger weight in the index. Look at the difference in performance: 2.5 up only, which is again still a decent month, 2.5% for the month. but the Qs market cap weighted up 6.5%. Again, I'll say it again, the same exact stocks, just shuffling them around differently. One index is equally weighted, the other index is market cap weighted. And the same could be said for SPY, which was up 3.5%. And look at the equally weighted SPY, or SPX, was down for the month. It was down a half. So if you try to be diversified for this month and kind of put your eggs in different baskets, thinking, hey, I'm going to try to diversify and reduce my risk by doing it that way, your performance suffered for doing it that way. So let's talk about what did very well for the month. So that's the one that's obviously the column that's highlighted here. But it was, software had a huge month and really kind of turned it on the last week. And if you look at the performance of let's see, IGV, I mean, this is pretty stellar. I have to say, if we look at the performance of what software did from the beginning of the month, again, put things in perspective. The last couple weeks of May, software did not do pretty well. There was one day where software went down 5.8%, right? So it really got hit towards the end of May. But look at what it did in June. Putting in together, it went through one clip where it was only down one day out of 10 in here. And then over the last, 2 weeks, you only have 2 red days. So very, very impressive for software. People kind of, including myself, like I was bad mouthing software, and I still think that there's too many software companies out there. But, certainly things like Microsoft, things like Google, did very well. Although I think Google might be going to belong to tech these days. But regardless, we can kind of look at the biggest weights in the IGV. Nice recoveries, like in names like Salesforce, although it's got, let me bring up not today's performance, but just the biggest names. Adobe was somewhat responsible for that strength because they had good earnings. They also came back very strong. The last couple of days, we saw some call buying, which I mentioned in a video earlier this week. Oops, that's the wrong symbol there. Sorry, there's a problem with my keyboard where not all the keys are working. But look at the look at the move right up to the top of the value area for the year. So would I be going long Adobe here? No, I wouldn't. But look at the move. That's from 450 to 550. So again, here's what this looks like on the daily chart. Really nice. Here's your gap up on earnings, and then really nice performance the last 2 days. And like I said, we did see a nice little call. Decent size, I shouldn't say little, but nice size call buyer that kind of gave us a little bit of hint that something was going on in software. So also, I always do this with the names that had the best performance. Salesforce recovered quite nicely from that earnings report. Microsoft, Oracle had a good quarter, right? ServiceNow continued to grind higher, and then really cyber stocks kind of turned it on the last couple of weeks. Palo Alto, CrowdStrike, although did not do too well today because I am long that name, but did very well. Also had a good earnings report a few weeks back. Datadog, FICO is at a 52-week high, right? It's just going down this list here of names. So Zscaler is another cyber name that's done very well, had a good earnings report as well. So that kind of recaps where the performance was. And it kind of just stole the show a little bit there from the semis, which the semis were down. I don't know I think the semis finished positive for the day, but they were down like the last 5 out of 6 days. Let's see if I have that performance, just so that you get a visualization of this. But they did finish positive for the day. They gave back a lot of the gains at the highs of the day. They were up at 1.2.5% for the day. But look at how they finished the week. Now again, this group got super overbought. We could look at this ETF really quick. I probably did a victory lap a little bit too early in the day, but it's holding the 20-day moving average, right? And notice again, Oh, I don't have RSI up here. I had to take it off for a reason, but you know, this got super overbought, right? And that's what happens when something gets really overbought. Eventually, you're going to see some profit taking, and this was down even with today's gain. You're looking at the last 7 days; it was only up. That was only this up the second day out of the last 7. So some profit taking there, but still, again, just shows you what, even with going down, what, five out of the last 7 days, it still finished up 8.4%. It's pretty stellar. Tech 7.6%. Of course, the you know, the bigger names in there. Blockchain stocks, I don't know how they did this well, considering Bitcoin was down huge this month. But the blockchain stocks did pretty well, up 7%. You know, some interesting divergence there that's happening in the crypto stocks versus the actual uh, crypto securities. So, you know, Bitcoin, Ethereum, things like that. Internet. So again, like it's the same story here, like, because there's a lot of overlap between FTN, the Internet ETF, and tech. And probably in software in there as well. Consumer discretionary, not bad, up 3.7%, right? Reminder that Tesla and Amazon are about 40% of that ETF. Travel names did okay. Biotech kind of creeped in there. You know, we had some positive drug studies towards the end of the month. XBI up 4%. Healthcare did okay. I was looking for more performance out of the medical devices. They did okay. They were up 1%. I tried to trade a couple of them. ISRG is a name in the TTG trend portfolio that stood out, but a couple other ones were kind of mixed in terms of performance. On the flip side, on the downside, geez, the solar stocks, and the like easy come, easy go with these solar stocks. You know, they got above, I was talking about them earlier in our Q&A that we have on Fridays, but look at what happened to the solar group, all the way back to just about to the lows of this year. I mean, talk about nasty, right? A little brief period there above the 200-day moving average, looking like they may turn the corner. And ever since this day back on, I think this was June 12th, just straight down. So nasty in the solar arena. What a fake out. And even First Solar broke today, right? First Solar, which was doing so much better, and I think is still outperforming on a relative basis versus the rest of the group. But look at the candle today in First Solar. That definitely looks like you have to tilt your head a little bit, but that looks like a Head and Shoulders. Left shoulder, left shoulder, head, right shoulder, and goodbye to the downside. You could basically draw. Sorry, this is after the fact, so this isn't going to help anybody. But but you could draw like some type of like that basically, or like, oops, I should really draw this like this. But regardless, you kind of get what I'm saying there. Ugly. All right, that was your worst performing group. Back to the downside. Metals and mining. Look at the Chinese internet names. That's another group. Everybody got all excited about a couple months ago. Not anymore. You don't hear anybody talking about Chinese internet names. Pretty disappointing there, right? Again, because we try to spot change in trends, right? But look at this. Wow, and look at the virgin point of control takeout. Sometimes you see that. Sometimes you see a complete rejection at a virgin point of control where the sellers just dominate, right? And that's a situation when you've got something that's been in a kind of in a downtrend for a while, is that sometimes you're going to be met with pretty heavy selling once it does rally a little bit, and that's basically what happened. Interesting that we've gone now from one virgin point of control, right? So high volume area that has not been revisited, to another one down here. All right, so that's just again nasty. Let's move on and just quick summarize. But aerospace and defense even finished down. That group had some strength. Retail for a while was doing very strong. So again, a lot of reversals, right? And again, you go back to look at where this was earlier in the month, all the way up here, right? Showing some strength, but look at how this thing closed. And of course things like Nike, Levi's, right? They did not have good earnings reports. So again, just kind of shows you, and that's kind of where I'll leave it. There's I think really that was the theme of this month was that, hey, there was some really good performance, but it really was the focus was very, very narrow, semi, software, tech. Now, why did the market go up that much, right? 3.5%. When you have so many names that were down, more names and areas down, I think, than there were up, is because tech is roughly 30% of the S&P, right? So that really did the heavy lifting, and it's really going to be interesting. We were talking earlier about kind of some things to kind of think about for the rest of the year. We know that from a seasonal standpoint, July is very good. It's one of the best months. However, so I personally, I don't just go out and buy just because it's a strong seasonal month. Something that I would be looking for as we begin the new month is for breadth to improve, right? If you look at the McClellan Summation Index, which I think I have this up from earlier, right? If you want a confirming factor, right, to say that, hey, there is, strong seasonalities kicking in. One of the things that you would want to see is the McClellan Summation Index begin to turn up, right, and cross back over, right, indicating more stocks are going up versus down. So again, you don't have to kind of, go out on a limb and say, oh, I'm going to do this because there's stronger seasonality. Wait till you see better participation in the market, right? Or watch to see if some of these areas just continue to go up, right? These strong areas. So I'll leave it here. I will say this too. We do have a special for that we're running for the second half of the year. That's going to be extremely cheaper than we usually do, and we're bundling that with the MarketWebs indicator as well. So you can kind of get a free look of the MarketWebs for 6 months. I think our specials, it's $500 for 6 months. So we're kind of doing that so people can get a little bit of a understanding of how to use volume at price, right? Some people have started to use things like Anchor VWAP, right, which is very basic. The thing that I don't like about Anchor VWAP is that it's subjective, right? You pick where you're going to anchor the price to, right? With the MarketWebs, you don't do any of that, right? And just like I was showing with the KWeb ETF, right? There's also with Anchor VWAP, there's no version point of controls, right? This tells you where there's overhead supply and where there's sellers lurking, hence this version point of control here. So you could check that out. Let's see if I can find it really quickly. I tweeted this out the other day. All right, so you can go back to I sent this 9:40 on the 26th, so on Wednesday night. I'll retweet this, but here's where you can get involved at Tribeca Trade Group. You can check out the trading room, and again, this is a gimme. It's $500 for the rest of the year, right? I'm very enthused and psyched for the rest of the rest of the year. I think there'll be some bumps in the road, right? I think we will get some more volatility, but the volatility has been great buying opportunities. So if you're positioned right for the volatility, it's something that I've kind of learned, over my trading career. Originally I'd be like, I thought, oh no, what happens if volatility comes? But volatility and uptrends are where you can really kind of end up making good money. All right. That's it for the first half of the year. Guys, have a great weekend and look forward to seeing you in the trading room.